Hey, what's going on, guys? Welcome back to another video. This video is going to be mainly focused on the two trades that I took today on SPX. These trades were based off the quarterly theory plus ICT concepts. This would be my third video on this. I do apologize. I do apologize for the previous video, which was on my computer. I just had to get that one up and recorded before I forgot. So that was just a little reminder for me. I recorded the whole video and what I wanted to talk about, but I think I didn't have enough time to really explain and go deeper into the topic and what actually happened. So I'm going to do this video, which is going to be more focused on analysis and understanding the moves behind everything. And this is going to be definitely more of a longer video. So if you're not here to watch the whole thing, I would highly suggest you that you would leave right now, because you're not gonna like it. So let's get into it. Okay. So again, we love to start at the monthly. Now we don't have to look at the monthly every single time. That's kind of like a weird thing to do, but it does remind us of where our bias is and what it would like to do. Now, if you look at this, this is so far what I've been hoping for so far. Kind of what I wasn't expecting in terms of news today and price action. What I was expecting was actually a reach into this high, this monthly highs. This monthly high that has been mentioned so many times that every time I repeat it, I stutter. So, this monthly high, I would like to see being swept, because this is also the consequent encroachment of a weekly fair value gap right here. So, do remind yourself that price currently, right, is in this. So like I was saying, we're in this daily fair value gap, this blue. Sorry, it's so bright, but the consequent encroachment of this this blue fair value gap, right? If we really draw it out right here, the consequent encroachment is right here. So we are quite literally, we almost got to it. And today was this daily wick, right? This huge selling wick right here on the weekly. Oh yeah, this is a weekly PDRA, not a daily PDRA. I don't know why I marked that as a daily. It was a weekly. That's what I was saying in the shower. I was saying higher PDRA, bigger move, and I'll explain the bigger move that we saw today. Nothing compared to FOMC or the 30-year bond, but it was a big move in my idea. So again, weekly fair value gap. This price right here, the one that rejected first, this came across right here. So this is the part where I'm still learning and I don't really know, and this is where I need to pay attention. Are we now going back down? Because if you think about it right here, right, this is starting this bullish fair value gap in a way. So are we going to trade all the way down and create a nice little small fair value gap and then kind of bounce back off and then trade right back into it all the way down? Would that be the move? Or are we just bouncing off and going up all the way back up? That's where time is money. That right here in trading, time is money, right? If we wait long enough, we'll see this play out, right? So yeah, this high didn't want to come, I guess, grab this liquidity up here. It did grab this weekly, what the fuck? That's funny. Someone on my YouTube commented, what the fuck? Okay, the laptop video that I had, I was complaining on my laptop being slow and laggy, and someone said, too much porn maybe is the reason your computer is lagging. That's funny. I'll give it to him. That's funny. All right, my bad. So like I was saying, we did not sweep this monthly high, and we are literally one day out. Basically, Friday is tomorrow, to ending the week. And if you look at the weekly right now, we're gonna close bearish. Or what I would like to see possibly is we end in a doji. So price right here on like the daily, for example, would be bought back up and come to like the opening price. That would be ideal. That would be ideal. Because on the weekly then, it would show a bearish doji, and then we can start selling off for the week. That would be ideal. Right? Because then we create that fair value gap when that candle closes. The doji, let's say it's like up here. And then the next candle can trade into the consequent encroachment. And I can take a puts all the way to consequent encroachment, wait for it to come back, take another put, and ride that wave down. That would be the play. The thing I was waiting for is, when do we start seeing that down move, right? When do we start seeing that bearish price action? When do we start seeing that fucking doji being created and that swing high being created? And when do we see this huge manipulation down after this manipulation up? Because we have a lot of fair value gaps here to start going. Very big range. When do we start going back? So on the daily, let's talk about, obviously we don't want to, I did say in my last video, I wanted to start swing trading, and that is still something in the talks in my mind. But I'm still doing quote unquote day trading. And I still have a bunch of day trading stuff here. So to keep in mind, I marked out this actually should be changed to weekly now that we've looked at it. So it's the weekly swing high. Also buy side, that's why it's blue. And then we have the previous day high, which got swept pre-market, but you should also mark that out. Then we have the previous day low here, which will get swept. We can mark it just for liquidity. So we could say like previous day low, okay? And so when we drop down to the 4 hour, where I do most of my analysis, previous day low right here, boom, bam, bada boom, bang. We can see that there's a lot of lines. There's a lot of lines, and that's not good. That's not very good. I don't know why there's so many lines, but that doesn't matter. Actually, let's go in the 1 hour because the 4 hour kind of fucks it up. So we know most of this analysis. Pre-market, this was pretty much like textbook, right? So we have the London session here. We have the London True Open, which is around here on the 5 minute. And we have previous day high, which gets swept on London. That's why we have this down move here. And this down move actually creates and starts the New York session, AM session. So when we open, right, I'm not caring about this price action much. I don't really trade this. It's 6 a.m., right? This is when I wake up. It starts being bullish, bullish, bullish. Now, where will we be going, right? What's the next draw on liquidity? So the next draw on liquidity would be above this high because we've already taken it out. We've already closed beyond it. And the next higher time frame based liquidity PD array would be this weekly swing high. So that's exactly where we went on the 1 hour. And believe it or not, this is when we opened, or open right in the middle, which I will show you on the 30 minute. But if you go and look in this quarterly theory cycle, we start at 12 a.m. to 6 a.m. This is the London. Then the New York is 12 or 6 to 12 p.m. And then afternoon is 12 to 7 or 12 to 6. Don't know why it's 7. And then 6 to 12. Don't know why it's that. There you go. Now, this is where the fun part comes in. There's multiple cycles inside a cycle. So Just to highlight, this will make no sense to you, but this right here is a copy paste of what's going on right here. Yeah. That's right. So this little move right here is a copy paste of what's really going on. So I'll explain it a little better. This is accumulation in the first cycle. Okay, then we have manipulation up above this high to grab high time frame PD arrays, which lines up with the quarterly theory. That's exactly what we need. And then guess what? We have distribution. We have complete distribution in the distribution phase. And this can either be continuation or it can be reversal. So this in itself on the 1 hour is a cycle. But then let's go, for example, to the 30-minute. Or we can go, I traded on the 5-minute, so I'll move down there, but I just want to show you the market open. Actually, we'll go to the 5-minute right away. Fuck it. Probably better price action there. You can see here at 9:15 we swept and we started coming down, and at 9:30 you can see this opening candle. Boom, we completely swept. We had a market structure shift right around here, and I called out in my notes, which is right here, which I will pull up right now. Give me 1 second. It's got to load all of these. Okay. Right here. So our first image was this 30-minute, and we know this. Would like to see price go under and sweep under London lows and then take out previous day highs and day highs. So what I had thought in mind before all this was take this high and then come to London lows and then go up. So that's actually not what we got. But then I realized what was going on, right? And then I was like, oh shit, we're gonna see a silver bullet because this is about to sweep. This is about to come down during manipulation or distribution, and we're about to get some shit. That's exactly what I said. I said silver bullet incoming. This is the formation. We're gonna get under these lows, and we're gonna start that silver bullet. Boom, got under London True Open, started buying because this is where people buy. Bought up, silver bullet, entered the trade. So that was the first trade. Okay. And then, right, we have this. Oh yeah, and I want to show you, there's cycles inside cycles. So we take our cycle, we draw our box again or whatever. There's lots of colors. Very confusing. Very confusing. I get it. It's whatever. Just fucking deal with it, please. So inside this, what was it? Manipulation move. We also had a manipulation distribution move. And this was the smaller picture of the day, believe it or not. But this I guess was the tradable part. Accumulation or continuation, if you will. Accumulation, reversal, accumulation, whatever. Don't really trade this. Don't watch this for this. Then you have manipulation, which breaks this consolidation right here. Manipulation up to what? Break this high right here. That would be manipulating. Break this high, sweep this higher time frame PD array. And guess where that lines up right into? Distribution zone. So we distribute in this green area, which is the distribution zone. We end the distribution right at the end of distribution. I mean, like, if that isn't like algorithmic, like fucking perfect, like I don't know what to tell you. This candle ends the distribution on the fucking dot of the quarter. Like, is that not like more like, what other proof do you need? And then we have a reversal, which is in the blue. Continuation or reversal is what we get. So that's just to prove to you that there's always cycles inside cycles. And you can go into the 1 minute, and you can then go into the 1 minute, find the cycle, and trade that. But I trade the 5 minute. Trade a little higher. Okay. And one thing to remember, it's always good to have very high time frame PD arrays, like the weekly right here. That's very big. That's going to be very powerful. I mean, a lot of people are going to have a lot of selling orders. If it's a 3 minute PD array, that shit's not going to hold up, bud. especially if you're trading on the 1 hour, 15 minute, like 3 minute, anything under the daily is weak in my mind. It's not weak when you look at it on the 5 minute, but you want a high impact PD array, and that's usually either on the monthly or the weekly. Now, you don't get to the monthly levels very often, nor the weekly, hence why the dailies are, they also have an impact, but once you get to a weekly, they have a really big impact. So then what was the other big time move, right? Big time, like, where do we want to go? So of this silver bullet, I knew that this was like during senior speeches. We had kill zones right here. Boom. We had London lows, which was right here. So I targeted that first. Okay. And I had 2 contracts because I knew in general that we were still in distribution. So we wouldn't just randomly start going up unless this London low was like super strong, and I would just exit my runner position right there. Obviously break even, whatever. So I kept it running because I noticed there was a 1 hour bullish fair value gap that we got traded into but did not close, and I knew that price wanted to come down to the consequent encroachment of it, or at least get past it. So I traded right here. I did kind of risk it because I didn't really know if price wanted to come down all the way and sweep this. It did, so it worked out in my favor, but I wouldn't do that every single time. Again, it ends distribution right here. We have a nice reversal. Obviously, that fair value gap gets filled, so now we're going to reverse off. And when we started reversing, I was like, okay, well, I know exactly what's going to happen here. We're going to have a market structure shift with displacement, and that displacement is going to create a displacement fair value gap, which I can now use to go long. And that's exactly what happened. And I actually don't know why this is here. Like, the long should have been like here, because I went long like right basically here. Stop loss is under here. And the take profit, a lot of people might think, oh, this is going long up here. While that might be true, it wasn't true here. And I'll tell you why. Because if you looked at the news, first of all, we had news at like 8:30 for unemployment claims, hence why it like went up so much. It was bearish, keep in mind. We had bearish news like right here. That was unemployment claims right here, and that was also a little effect. But guess what we had at 101? We had the 30-year bonds coming out, and at 2 we had FOMC. So if you guys know price action, if you guys have watched price action, if you guys have studied or even watched price action for more than a month, you guys would understand that before every FOMC, at least a day before, we get some kind of consolidation. So in your mind, if you know that literally an hour before, like when was this? 2 hours before FOMC, we have a trend starting to form, you should probably put your stop loss or your take profit somewhere a little lower. So I was like, okay, well, where could price possibly start going lower and consolidating in a discount area where I would take profit? So this was this high right here. And as you can see, price closed right under this high, and I sold up here. And then this is where we get this, I guess the distribution of this higher 1 hour time frame, right? Distribution, and this distribution was due to the 101 right here, 101. 30-year bond. I was not expecting this, to be honest. I was like, why the fuck? Like, market just moved all of a sudden. And I was like, oh yeah, that's why. Looked at the news, and that's why. And then FOMC happened down here with Jerome Powell at 2, and I was like, oh yeah, this is 100% filling this gap, which it did. Okay. Another target was also this PD low, or this previous day low, right? So we had this previous day high that got swept, and then we had this previous day low that also got swept right here. But obviously, this would be your target if you want to be safe and sound before FOMC. Should definitely do that. That would be your target if you were entering off the 30-year bond. I don't know why you would do that, because if this flipped, we actually could have gone up here and swept this if this was flipped. Unfortunately, it was not, but this was pure distribution. And yeah, that was like the 2 trades, and this is like to me, like, I understand this. This makes sense to me. This makes a lot of sense. I actually do want to show you the indicator that I would be using. I believe it's this one, Joshua. And then you can go ahead and, okay, yeah, it's mine. Boom. So what I would do is I would, let's say I want to trade New York session. So instead of clicking all of these sessions, because it will show me all these sessions, I just click the one I need. New York AM. That's what I need. So then on New York AM, what I will do is in the session, right, on the 5 minute, whatever, it'll show me the quarter. So this, notice how this quarter matches up with what we have here. Notice, lines up. That's because it's exactly it. Mine just has color, just for me as a visual representation, right? But you can use this just like, I know it's pretty light. That's why it's hard to see, but it does show you the New York True Open, right? Because this is the second quarter. So this is the New York True Open. This down here, what was the London True Open? It was like down here. Yep, down here. So you have like two True Opens. The one I like to target most is the London, but you could do you could 100% do the New York. You could trade under this. So the idea is you can sell anything above the True Open and buy anything that's under the True Open, right? So if we're above here, that means we're looking for shorts, not buys. If we're under the True Open, that means that we're looking for buys and not sells, right? So here, for example, we're what? Above the True Open, so we're looking for sells. But here, for example, where are we? We're not only above the London True Open, but we're under the New York Open. So it's like, what the fuck? Like, where are we supposed to go? So I wouldn't take a position here. But let's say you timed yours on the London True Open. Would you buy here? No, because you're above the London True Open. But if you come here, guess what? You could buy here, and guess where it went? Up here. Like, does that make sense? Like, that's crazy. No? You don't buy here, but you buy here, because this one's above, this one's under. It's like discounted premium. Like, it's literally discounted premium, just an opening price on the second quarter of that session cycle. Yeah, it's confusing, but if you get it, you get it. So that was that. So for tomorrow, wow. Oh yeah, DXY. Let's talk about this for a second. I did look at DXY for a little minute, and this actually showed multiple things, or actually one major thing. We were in this like 1 hour fair value gap, which is purple right here, and we were kind of like consolidating in it, right? We weren't breaking out. We didn't really break out. So what I was hoping is either move up here or move down here. Obviously, if we were looking to go sweep those highs, the monthly highs, I would want to see DXY go down, obviously, right? So that's what we want to see, and we got that down. I wish that this actually came a little lower, even down here, where we could have swept on SPX, remember, that monthly high. Unfortunately, we did not get that, but we did get a sweep of this fair value gap. So we not only got a sweep, but then we had 930 open, and then we had the unemployment claims, and which was good for DXY, hence why it went up. And then we had, we had the distribution after 9 a.m. So this is the whole thing. And then you get to 1 p.m., which is, so this is the distribution right here. These three candles are 9 a.m. to like 12. And then you have the big ass distribution that comes in later, which is the fucking 30-year bond FOMC. You can see how these two had a huge impact on the XY. Boom, bam. We closed above the 1 hour fair value gap. So little details matter. Little things matter. Little things matter. And when you look at this, you might be like, what the fuck is he even trading? And what the fuck is he doing? There's too much just to be taking that two little tiny trades like this. But to me, if I can understand this price action, I can understand anything. I know that I shouldn't be trading this. You know why? Because there's a lot of factors that tell me that you should not be trading that. There's absolutely nothing that you should be. Even if you're a scalper or anything, I don't care how you do things. In my opinion, and I've heard this from a lot of people, right? The market is controlled by algorithm. The market is controlled. The market is manipulated. You can see every day prices move where they shouldn't be, where they physically can't be, and somehow get repriced in matters of minutes, of hours, and boom, bam, all of a sudden you're back on track, and people just made millions. Now, I did go to the New York Stock Exchange, and we didn't see any of that. But obviously, you can't go behind the desk and see what they did. But they had a fuck ton of charts on their screens, a fuck ton of EMAs, a fuck ton of VWAPs, and a fuck ton of buttons to press here and there. Orders coming in left and like you could see their order book. Couldn't even read one single order on how fast it was. That shit was fast. But let's just say, right, I want you to realize, like, you might not think that this is huge, but like if I just put in $1,000 for each trade, I would have made more money than I could have ever made in, my whole job salary, like in these two trades. And that was because I understood this quarterly theory, the ICT concepts, how to use them. And the best part of this is you learn so much, but can you actually execute? I love that question. You've learned all of this stuff over the years. I've learned so much over the months, studying late nights, whatever, early mornings, every single day in class, watching price action. Can you execute on the charts? Can you do this live? Can you spot it live? Can you trade live? Yes, I can. No, I can't. It's that simple. Or do you have to spend 4 hours every night researching how do I fucking trade again? Now, I will agree. I have been strategy testing, and I have been strategy, hopping, if you will. But this one makes sense. This one makes a lot of sense because it's all algorithmic, and I was looking for something like that. Like, what else, and please tell me in the comments if you know this, what else teaches something that is so algorithmic to the dot? Could be a little, mistaken here and there, but to the dot, that teaches about price, algorithm, time, price, and order flow, plus the bias. That's exactly what I'm looking for. Because I know how to trade that with ICT concepts. Because that's also what ICT teaches. So you combine the quarterly theory to help you with your ICT trades. I didn't need this quarterly theory. Like, don't get me wrong. I don't need any of this. This just helped me figure out that we were in a zone of manipulation / distribution in that time. And it actually lined up perfectly. And it lined up in the higher time frames. And it lines up in the bigger time frames. But I could remove all this and just and be like, oh, weekly swing high, displacement down, silver bullet, fair value gap, consequent encroachment, target London lows even lower. Boom, done. That's just ICT. That's not even the quarterly theory. But I use the quarterly theory and what I know from ICT to combine both with time, price, and order flow to create two beautiful trades. Back to back. End of story. See you tomorrow.